Welcome to JDMBI.com. This is John's report. It's for the 26th of February. Pushed to new highs, still maintained a little bit above them going into the weekend, and readings are still clean for the upside. That we didn't see more of a pullback into the middle of this actually just shows how bullish things really are, relatively speaking, to the current environment. And again, it's an election year, and this is where you're going to get just the softest approach possible from the Fed, at least. And at this particular stage, not a whole lot of justification for the Fed being as neutral as they are, but they're going to maintain that at least for the time being. As we can see, there's still continued inflationary pressure that's going to keep pushing, but that's weighed against economic conditions, but they really haven't deteriorated as much as some people thought that they would, given the rate increases. Of course, that depends on the sector you're in, but from an NQ standpoint, also huge improvement from those readings as well, and still maintaining its positive bias, albeit more likely to be range bound than to really do anything special. Treasuries, again, money flocking in there caused the yield to drop a little bit. But again, this is an interesting setup because even at this level, you're still outside the range of where the Fed is with rates and the propensity. You've got to gauge whether the likelihood is that you'll have a greater chance of the Fed easing, doing nothing, or rates even rising. And I think that just becomes a matter of watching where we are with the petro. And mid 70s, you're not going to get any rate cuts. That's for certain. You get over 80, and I think that there's going to be a question as to whether or not your bias starts to move towards an increase. And literally, it's just going to depend too on some of the economic factors. Difficult because when you massage your numbers so much that everything always looks rosy, it becomes problematic to make an effective call for things. The euro is still way over by the EU. Is just getting worse by the day with some of the policies that they generate. But it's a bonus for the U.S. because it just improves the ability to trade with that large partner. Of course, you've cut out a good chunk of the world now with sanctions and various other restrictions, but hey, they think that's going to work out for them. That's good for them. Gold is going to continue to creep higher. It's already been held back from where it should be, but should be is relative to how much demand there is. And the reality is the physical demand is still very strong, not abating, and it's pretty strong from central governments, which is always an interesting case, considering they can just print money. Why even bother having gold? Always begs the question. Bitcoin, you're just caught in the middle zone at this particular stage. The interesting one is ETH breaking out above there. So that kind of significant disruption, of course, everyone's always talked about ETH being a primary driver over Bitcoin and that, which is why I cover both of them. Needless to say, it's a significant outbreak from where they had been trading relative in tandem. It took a while for ETH to catch up to Bitcoin from the last rise, but now ETH taking another lead again in the relative push higher. From our 50K, we had the massive move up, and you can see we've not filled back any of these positive extremes, going all the way back to even the 68 range and that. So pretty healthy. Overall, got a DOC spread taking place at this particular stage, giving us a little bit of the softness, not really filling in a whole lot of anything. You would just be going back to the breakout positive extreme even before that open took place, and it's not a huge significance really. I would need to see something that brought you back down to the more significant ranges to really ease things off, but it does just point out when things go south. There's a ways to go. Intraday, it kind of reflected that because you started out with pre-market, huge rise, and then as soon as the market opened, it traded that all the way off, and then pretty much just went sideways, which still was quite an improvement given the fact that you had such a huge up day prior to it. And here in the post market, things just sort of benign and pretty effective month so far. So nobody is going to complain about that, except for those that were on the sidelines and didn't follow it. But it was pretty much soft to nothing, and then just a single day flipped it all around. Everyone can thank Nvidia on that one. As always, though, anything relevant, I'll get it on the Skype chat. Have a good one. Trade well.